next step of the accounting cycle that we're going to cover is called posting. Really all posting is moving information from the journal to the ledger. So you can see we've got our created transactions over here on the left in the journal. We're going to have to put them on the ledger. Now, a couple of the differences. One main difference between the journal and the ledger is that the journal shows the detail of each and every transaction. The ledger then shows the detail of each and every account. So you can see we've got individual accounts over here. Now, one of the nice things, since it's showing the detail of every account, is it also maintains a running balance of each and every account. So that way we know exactly how much we have in each account at any moment. So let's go ahead and go through with posting. You can see we've got first transaction here dated July 1st. We've got a debit to cash, and that's where we're going to start. So let's go ahead and we've got the cash accounts. We've got cash here. We're going to call it account number 101, 100 being the assets classification, 01 just being the place within the assets classification. And so we've got July 1st. We'll go left to right over here on the ledger. July 1st is the date. That's our first step. The middle step here, there's a description. I'm just going to leave this blank for while we're doing the manual method. It just becomes a little too much. Second step is really the post reference, so G1. Why is it G1? Well, here's your letter G for general journal. Here's your 1 for page 1. So G1 is our post reference. That's where we got the information. We're debiting the account 14,000 just like we said so in the transaction. And so our new balance, since we had nothing before and we debited the account 14,000 at this point, is now 14,000. Last step then, when we are posting, is we go ahead and we bring the account number over here to our post reference on the journal. That means where we put the information. So now we're going to go ahead and post the credit portion of the transaction, Tim Long Capital. So we open up Tim Long Capital, account 305, 3 being equity classification, 05 placed within the classification. And here we are July 1st again, G1 again, credit for 14,000 and balance of $14,000 credit. We had nothing in, we credit the account 14,000, hence $14,000 credit balance. Bring that 305 over here, and there you are. Now you're on to rent expense. Next transaction, July 2nd, rent expense, G1, $300 debit, debit $300 balance. Bring account number 550 on up. Now we're on to cash. Now we're on to cash a second time. So July 2nd here, G1, we credit the account 300. Now the balance, well, we had a $14,000 debit balance. Debit is positive for cash. We credit the account $300. That means we're subtracting $300, so the new balance is $13,700. Bring that 101 on over to your journal page, and you're good to go with the next transaction. Supplies, there's your July 3rd, G1, $1,000 debit, $1,000 debit balance, bring the 115 over. Now we're on to cash again, July 3rd, G1, credit of $1,000. We had $13,700, credit the account 1,000. Now we're at $12,700. Bring the 101 on over. And that is how you do posting.